Let's talk a little real estate. Bryan here with your May market update. So, what happened last month? Well, rates were supposed to come down, but instead we ended the month with the highest rates we've seen since November of last year. Now, fortunately, with the Fed recently promising to lower rates soon, we saw some relief and we're now closer back to that 7% level. So let's see what effect these rates are currently having on the market, and then we'll cover our normal metrics to see how the market performed overall last month. So stay tuned as I break this all down for you guys. Okay, first up, let's check out last month's sales. Last month, we sold 2,012 homes. Can we get a small round of applause for finally breaking into the 2,000 barrier for the first time since June of last year? Okay, that's pretty sad, but hey, celebrate the small victories, right? Now, there's a few things to unpack here. First, this was a 17% increase over last April's sales. Now, more surprising is the fact that this was a 17% month-over-month increase over March sales. Now, at first, I was going to say that this is just completely normal to have April sales higher than March. But since the pandemic, the trend actually went backwards, where April sales have been sluggish compared to March. So it's nice to see the trend reverse back to normal. Now, with sales abnormally increasing last month, let's see what effect this had on the median price. On the screen now, you can see that the median price also increased last month to just under $470,000. This now puts us up 11% over the median price this same time from last year. Now, more dramatically, this means that just since January, our median price has risen about $30,000. So just since January, prices have risen 7% in just 3 months, guys. When you consider the fact that we've increased 7% while rates this spring have actually increased as well, that statistic is just mind-boggling. Imagine what our prices would have looked like if rates had dropped, say, to 6% as we initially hoped they would going into the year. Yeah. Okay, now let's check out our inventory levels. As you can see now, we ended April with 3,349 homes. While this was the first time in 4 months that we saw inventory increase, adding 97 homes to the market isn't much to brag about, but celebrate the small victories. Okay, last but not least, let's see what's going on with housing absorption by price range. I created this metric to illustrate how the market is performing for different price ranges. Now, just because $400,000 homes are flying off the shelves doesn't exactly mean that the $1 million buyer is likely to experience the same level of competition. Now, the higher the percentage, the more competitive that market segment is performing. So first up, our homes priced between $250,000 and $500,000. Now, this also represents the largest market segment. We actually dropped from 54% saturation down to 53%. In other words, more than half of the homes you see online are already under contract within this price range. Next, we have homes priced between $500,000 and $750,000. This also managed to decrease from 46% down to 44%. Next, we have $750,000 to $1 million. Surprisingly, this bucked the trend by increasing from 34% to 36%. Now let's talk luxury, homes priced between $1 million to $1.5 million. This remained flat at 30%. Finally, we have the ultra luxury market of over $1.5 million. This saw a huge drop from 21% down to 16%. Now, overall, the market dropped from 46% to 44%. Now, when we look at just the raw numbers here, you notice that even though the percentage has fallen, the amount of homes currently under contract has risen modestly. Now, what it all means is this. We ended the month with only 97 more homes actively on the market, right? But over the span of the last month, we actually added 257 homes. It's just that most of those additions went under contract immediately. Okay. Now let's try and make some sense out of all this madness around us. Sales increase along with the median price and inventory levels, But with the addition of more inventory, the market has become a little slightly less competitive. Now, frankly, I think much of that had to do with the fact that mortgage rates ended the month above 7.5%. Now, it appears that rates may start coming down, so as the rates start coming back down below 7%, that should start to slowly bring back those buyers that hit the pause button last month. So, what should you do? If you're a buyer and you can afford to suck up a 7% mortgage, I would still encourage you to purchase now and embrace the old adage in real estate: you marry the house and date the rate. Meaning, lock in the price now and simply plan on refinancing next year or the year after when rates come back down to a more generous level, say 5%. Now, I don't see prices coming down or stabilizing much until we reach August, when the normal summer rush ends and the new commission structure starts to really affect current buyers. Now, if you're selling, it's quite the mixed bag. Typically, May and June are the best months to list your home. I just listed an affordable home last weekend for an investor and wound up with 16 offers in just 4 days. But with prices increasing, it may not hurt to wait another month or two for the comps in your neighborhood to peak just a little bit more. Now, come August, when this whole commission structure changes, Lord only knows, we're staring right down the barrel of a shotgun loaded with birdshot ammo ready to just spread everywhere. It's all but guaranteed to be a complete and utter massive mess. And ultimately, the effect this will have on the market is very widely unknown. Are sellers waiting for August only to flood the market with hopes of paying out a smaller commission? Will buyers rush the market in June and July when they realize that they'll be on the hook to pay their agents' commissions come August? We could very well see a quiet August and September as all this disruption shocks buyers, sellers, and their respective agents, as everyone takes some time to acclimate to this new world we're manipulating and moving in. Frankly, if you're going to sell, I still maintain it's better to avoid this entire mess and list in the next month or two while the market is still hot and buyers are very much motivated. Well, that's it for this month, everyone. Stay tuned because I've got some amazing property tours coming up, including a pair of brand new custom Elite Series Blue Heron homes that will absolutely blow you away. So, see you guys on the next one, and deuces.